We're able to weather the storm that's out there because of our diversification and our unique approach.
We're 3 years removed from the start of something awful that happened in this world. We won't speak more of it than that, but you know what it was. The good news is we got through it. It was tough, but it was worth it to carry on as best as we could. We lost loved ones along the way, but things are going better now. Albeit not exactly the same situation, a similar sentiment can be had for what it feels like to have been a SoFi investor over the last few years. Nobody said being a bull would be easy. Fortunately for us, SoFi's CEO has taken us on a journey that he believes, despite the ups and downs, will bring us to brighter days ahead. We're all taking a shot in the dark by following this guy, but he has a pretty convincing and exciting strategy. He calls it SoFi's Financial Services Productivity Loop. It's quite wonderful, really. Hear me out. Well, hear him out. 1. We provide all the building blocks that people need to carry out their financial needs. This will bring them in the door. 2. Once they are in, we use the magic of data to figure out what may be going on in their lives. We then offer them some money to make the going easier. 3. When they take our money, we figure out what other things are happening in their lives. We then offer them more of our money from one of our other money piles to make the happening smoother. 4. Lastly, and this one is where the rocket science comes into play. We keep them happy and coming back every day to repeat the entire process. It's simple, really. We show up for the people when and where they need us. If we do that right every day, we win. We take most. Okay, I think you understand. It's a genius strategy. But what if I told you that the cost of showing up every year is hundreds of millions of those beautiful greenbacks? Hold up. Don't run. There's a happy ending here. I'm happy to say that Noto and team are guiding us through this journey very well. The horizon is starting to illuminate. The cost of this financial services productivity loop thing is paying off. The contribution losses of SoFi's financial services segment are at their lowest point in the last 2 years. At the same time, SoFi is making more profits from loans than ever before. In simple terms, that means we're nearing break-even. We're nearing the money-lit horizon. And you know what comes after that, right? Profits. Cold, hard profits. And not just adjusted EBITDA profits, actual profits. The profits you don't have to whisper for fear of being yelled at about generally accepted accounting principles, or GAAP as they call it. GAAP. If Anthony Noto continues to steer this ship as he has for the last 8 quarters, with record revenues and earnings beats, SoFi will soon be a profitable national bank. A Silicon Valley fintech turned profitable national bank. Can you imagine? I sure can. Why do you think we call this Bull Academy? I can see the headlines now, but I'll keep that to myself until it's actually real.
Our performance is what we're focused on, and I can't think of a company that's on track to do over $2 billion of revenue and the type of profit improvement we're driving with 40% top line growth and just the diversification we have across so many businesses.
Yeah.
The only way you can drive 8 consecutive quarters of record revenue is that you have different businesses that can perform in different environments, and you have a management team that can allocate resources to make that happen, and that's what we're doing, and that's what we can control.
In this video, I want to tell you more about SoFi's Financial Services Productivity Loop and how it contributes to the company's growth and bottom line. I also want to show you the numbers. Let's dive into the financial services segment of SoFi's 2023 first quarter earnings report, so you can see it for yourself. First, let's take a quick refresher. SoFi is a financial tech company that offers a range of financial products and services, from personal loans and student loan refinancing to investing and wealth management services. It also happens to be a nationally chartered bank. What we're here to discuss today is how it drives customer growth and its eventual profitability. Now that we're all on the same page, let's get to that. SoFi's Financial Services Productivity Loop strategy is built around 4 key components: acquisition, engagement, cross-selling, and retention. The strategy is designed to provide a seamless and integrated experience to customers across a range of financial products and services, which drives increased brand loyalty and higher lifetime value of each customer. Let's take a closer look at each of these components. Acquisition. SoFi acquires customers through targeted marketing campaigns, referral programs, and strategic partnerships. By attracting new customers, SoFi aims to expand its member base and increase revenue opportunities. Additionally, thanks to having its name on the building that hosts 2 big-market NFL teams, The company is able to drive billions of impressions on its product offerings each football season. The SoFi Stadium also hosts concerts by A-list celebrities, WrestleMania, college football championships, and the upcoming 2026 FIFA World Cup and 2028 Olympic Games. All of this helps make SoFi a household name, which drives trust in their brand. As trust is an important component of any bank's relationship with current and potential customers, SoFi's increasing brand recognition makes their customer acquisition strategy increasingly cheaper, due to the fact that they are able to achieve higher take rates by potential customers to whom they market their products.
We've seen at SoFi is that our members trust us greatly, not just with their checking and savings needs, but their needs more broadly, whether it's their credit card or their brokerage account or buying a home or paying for college education or refinancing.
Engagement. Once a customer is acquired, SoFi seeks to engage them by providing a range of financial products and services that meet their needs. SoFi's product offerings include personal loans, student loan refinancing, investing and wealth management services, mortgage loans, and banking services, such as checking and savings accounts. A competitive advantage that SoFi has to succeed in this phase of the strategy is its nature of being largely online. Because it has no physical branches, it saves on operational costs. SoFi, unlike its legacy peers, can pass on those savings to its customers in the shape of lower interest rates on loans and higher interest rates on bank accounts.
Our value proposition is that we want to be there for every one of the major financial decisions in your life and all the decisions in between every day. So we want to help people get their money right by helping them borrow better, save better, invest better, protect, and spend better. So this is our first foray into helping people spend better outside of just financial services products. So we launched SoFi Travel with Expedia to give our members great value in their travel choices, great selection, great ease of use, and most importantly, great prices. Prices that are even better when they pay with SoFi and they use their reward points and they actually generate reward points with us. So we're providing what they could typically get someplace else at an even better price, so they're spending better with us. We'll look to do this in other categories like entertainment and other types of things like sporting events, et cetera, that are high ticket purchases to give them a better way to buy with a better currency of our reward points and our partners that are providing discounted inventory.
Cross-selling. As customers use multiple SoFi products and services, the company is able to leverage its data and analytics capabilities to identify additional financial products and services that may be of interest to them. This allows SoFi to cross-sell its products and services to existing customers, increasing revenue opportunities and deepening customer relationships. What's more, the increased revenues are virtually free, given that the acquisition costs are mostly what it costs to send an email or show a pop-up in the SoFi app. In fact, in prior years, as much as 65% of SoFi's home loans were sold via this approach.
And we raised our outlook. What's driving is the diversification of our business. We built a platform that allows us to be a one-stop shop for financial services products for our members. We're trying to help them borrow better, save better, spend, invest, and protect better. And what you're seeing in the results is strong growth in personal loans, up over 70% year over year, and with great credit quality. In addition to that, we're seeing an acceleration in the growth of our direct deposit members because we're offering a really high interest rate on checking at 2.5%, and we'll offer 3% on savings later this week. That high interest rates driving high quality account openings. 50% of our new funded accounts are direct deposit, and that results in more spending by them. Our annualized spending is up over 2x versus a year ago because of those direct deposit customers. And then our invest business continues to see really strong year-over-year growth, as well as credit card and Relay.
Retention. To retain customers, SoFi aims to provide exceptional customer service and support, as well as offer personalized recommendations and tailored financial solutions that meet their needs. What's more, this strategy in and of itself is one of retention. The more services and products SoFi can offer its customers at competitive rates, the less reason customers have to go looking elsewhere for solutions to their problems. A great example of this is that if SoFi can't offer a customer a personal loan, for any number of reasons, SoFi's app finds other lenders that are willing to offer a personal loan to the customer. So that the customer doesn't have to restart their inquiry, SoFi is able to provide the other lenders all the necessary information they need to qualify the customer. Once the desired loan options are found, SoFi presents them to the customer, and the user can finish the entire application process with the other lender without ever leaving SoFi's app. I've been through this, and I can attest to how smooth and seamless it was. It's truly a one-stop shop. If they don't have what you need, they'll still give it to you via one of their many strategic partners. It works very well. There's a good reason Walmart won the vast majority of the retail market, and Amazon owns online shopping. Being the one-stop shop is both the means and the end. Now that we've walked through the main components of SoFi's financial services productivity loop, let's take a closer look at each of SoFi's financial services products and how they contribute to this strategy. SoFi Money is SoFi's cash management account, which offers customers a range of banking services such as a high-yield checking account, a savings account, and ATM fee reimbursements. With this suite of banking services, SoFi is able to acquire and retain new customers who may be interested in other financial products and services. Furthermore, by having customers set up SoFi as their direct deposit accounts for their income, SoFi gets more deposits that it can use to lend out more money to other customers and businesses. This works very well because SoFi offers some of the highest interest rates of any bank. In fact, at the time of this video, SoFi offers 420 times the amount of interest on savings than legacy banks like JP Morgan Chase, Bank of America, and their ilk. On checking accounts, SoFi offers 120 times more than that group of banks that drain their customers of their hard-earned money. SoFi Invest is SoFi's investing platform, which offers customers access to a range of investment options such as stocks, ETFs, and cryptocurrencies. SoFi also offers their own managed exchange-traded funds, ETFs, for customers who don't want to pick their own investments. Some of those ETFs even provide passive income to investors. By providing a convenient and user-friendly investing platform, SoFi is able to engage its customers and drive cross-selling opportunities using information from the investment portfolio of their members. SoFi's credit card is its newest product, which customers can use to earn cashback rewards on their purchases. By offering a competitive credit card, SoFi is able to acquire new customers and provide an additional financial product that can be used in conjunction with other SoFi products and services. This gives SoFi more data on the spending behavior of their members, as well as their financial health. SoFi even rewards customers for paying down their credit card debt because they want their customers to be better with their money. Selfishly, the more responsible SoFi's customers are, the less risky it is for the company to lend them money via credit cards and other loan products that SoFi would benefit from cross-selling. SoFi Relay is a platform that enables customers to view and manage all of their financial accounts in one place. By offering this service, SoFi is able to engage customers and provide a convenient way to monitor their finances across their accounts with SoFi and other financial institutions. It also gives SoFi more important data about their customers, which the lender can use to make more relevant and less risky loan offers.
We just posted our 8th consecutive quarter of revenue in yesterday with 46% year-over-year growth, $460 million of revenue. Those 8 consecutive quarters of record revenue performance reflect the trust and reliability that we're delivering for our members.
Okay, now let's analyze SoFi's financials and future outlook. SoFi's financial services productivity loop strategy has come at a cost. That cost may include your tongue. The company has been consistently posting losses in its financial services segment for several quarters. However, as we saw in SoFi's Q1 2023 earnings, the contribution losses for this segment have been gradually decreasing over time. And this trend is expected to continue as the company's financial services products gain more traction and generate more revenue. SoFi's focus on building out its suite of financial services products has helped the company attract and retain a large customer base. This is made clear by the fact that, at the end of the first quarter of 2023, SoFi's customers were using an average of 5 financial services products for every loan taken out through the company. This indicates that the financial services productivity loop strategy is working and that customers are finding great value in the bank's full range of financial services and loan products. As the contribution losses for SoFi's financial services segment continue to decrease, the company is expected to reach GAAP profitability, with the financial services productivity loop strategy becoming break-even at the very least by the end of this year. In the long run, as the financial services products attract more customers and bring in more revenue, this segment will contribute positively to the company's bottom line. SoFi's lending and tech segments have been profitable, and these segments have helped offset the losses in the financial services segment. Overall, SoFi's financials demonstrate that the company's strategic focus on building out a suite of financial services that drive sales of financial products is a long-term play that has the potential to pay off in terms of delivering profitable growth for the company, with great customer retention. The beauty of this strategy is that revenues become increasingly cheaper over time thanks to the dynamics of cross-selling. So, this is what you need to write down on a napkin and put in your pockets for whenever you want to cry a little on the down days of this finicky market. SoFi's financial services productivity loop strategy is a key to its future success. Yes, it costs a lot of money today, but it does cost much less than it used to. Also, it's driving the right kind of growth across the other segments of the company. By providing a range of financial products and services that meet the needs of its customers, SoFi has been able to attract and retain a large customer base and drive revenue growth. While the strategy is certainly costly, as evidenced by the contribution losses in the financial services segment, SoFi's financial statements from the first quarter of this year suggest that the strategy is working and that the company is on track to reach GAAP profitability, just as our dear leader said it would. As SoFi continues to build out its suite of financial products and services, the company is well positioned to be the one-stop shop for its customers' financial needs and drive sustained growth and profitability in the years to come. Now, that is a hell of a moat, no matter what any of the fancy pants say. Well, that's all for today. You've been watching bullacademy.org. Great choice. If you enjoyed this, it's your sworn duty to hit the like button and subscribe for more. Comment your kind thoughts, or put me on blast for something I got wrong. Whichever makes you feel better. In the end, I love you for watching. Stay bullish, and I'll see you again in the next one.